Hey guys, thanks for checking out this week's FinPrep Trading and Investment video newsletter. Alright, so the anticipated volume did pick up. It took until Friday, but it did arrive in fashion. It basically sliced through. We had price coming in through the rising 50-day moving average, as well as that trend line that we've been looking at for some time, which has kind of capped this breakout to slightly new all-time highs. Interesting thing about where it closes, 213 and a quarter. You know, it corresponds pretty doggone well with the week of our prior all-time highs at 213.78. That week closed in and around that 213 level. So a pretty interesting spot. The question here is, on the positive scenario, is this a retest of prior all-time highs that would kind of help get the gears in motion to pave the way for further upside? Well, our stochastics, are essentially still indicating we're just in neutral territory, so we don't want to jump the gun there. On the other hand, the daily MACD is pulling away from this signal line and is quite close to turning below the zero line, which generally could induce further selling. So we'll definitely need to keep an eye on that. Wouldn't want to jump in heads and feet. However, we'll see how Monday's open and subsequent trading pans out. In terms of visible volume, it is somewhat interesting that the sell-off we had on Friday does correspond in absolute levels quite well to the second day following the Brexit referendum sell-off bottom, which produced a pretty remarkable turnaround from there, as well as the January lows, later to be confirmed by February, but same type of volume. So it could be the retest that was sort of looking for in terms of a positive scenario for price moving forward. If we do get a bit further downside action, what would be a possible target zone that we would consider in a case to add to longs or take a swing long? And basically looking at this trend line again, prior all-time highs back in May of 15, we had price come up from the underside and be rebuffed at that stage in June, as well as July of 2015, November 2015, arguably December as well. And then same thing with our 420 highs this year. Bit of resistance taking place as market tried to chop a bit through that in June, and then successfully doing so on a more prolonged basis in July, moving to the sort of drift up that we had here through the summer. So should market continue to sell off, 210-ish would be an interesting zone for us, depending on how price behaves, needless to say. Wouldn't necessarily just blindly jump in. So good stuff. Volatility is returning, provides us the opportunity to add to longs and or take shorts for the nimble. So this is good. This is what we're looking for. In terms of currencies, quickly, basically not terribly sustainable in terms of the move. So just here's our Jackson Hole Friday. We had 2 up days followed by more or less 3 days of downside action, now with a bit of 2-day rise. So it does look still like remaining within a trading range. Didn't quite get the opportunity to retest the 25 at the present time. So not really willing to call a direction on currencies at this stage, just given the choppy sideways nature of it. Yen played out beautifully in terms of bouncing off its lower trend line support, but again, only for 2 days, and then here we have it reversing much of the move already. So a bit interesting. Actually, I'd be curious to know if yen can revisit the lower trend line and take it out, what other implications that would have given its correlations with, I believe, gold in particular. Euro more or less drifted up, although in an up-down fashion, so bit much for us. And on the other hand, the British pound does look interesting. So it did get above its 130.6 level, acting as resistance slightly, and came in and stopped essentially right on the second day. So we had 2 days of sell-off following Brexit referendum, 2 days of up move, kind of just reaction bounce, and that's essentially right where price was stopped. On the positive side, you do see the 20-day moving average crossing above the 50-day moving average in a bullish fashion. MACD's above the zero line as well, positive crossover, so that's positive. Looks like, with a bit of downside drift, your stochastics are beginning to move towards deeper zones of being less neutral and more oversold. So that would be interesting. And on the weekly chart, we do have a positive MACD crossover, which from deep levels could then, it would be interesting to see if it then would produce the basis by which a longer-term move up in the pound could be created, perhaps even retouching the 50 and so forth, or the trend line drawn off the prior highs. Remains to be seen. On the other hand, just classic textbook fashion, these sideways consolidations are typically continuation patterns, so you would anticipate this to, in most cases, break to the downside and produce further down leg as we had here. Probably not as aggressive, but so it can go either way. But it is kind of an interesting zone. We'll watch the pound with particular interest, but stocks are starting to produce some volatility, which then gives opportunity to add at better prices and or take shorts. So that's what's going on last week. Looking forward to an interesting week this week as well. So thanks for checking us out, guys.